The market is all over the place these days. One day it's up, the next day it just plunges. And if you felt unsure what to do with your investments lately, you are not alone. A lot of retail investors right now are making moves not based on strategy, but based on emotion. They're chasing hot trends, panic selling on red days, and following what everyone else is doing, because doing nothing feels very risky. But that kind of thinking, that's not strategy. It's called herd mentality, and it's the most dangerous bias influencing investor behavior today. So in this video, I'll show you how herd mentality affects your financial decisions, how you can tell if you are falling into this trap, and most importantly, how to break free so you can invest smarter even in these uncertain times. Hey there, I'm Tanya and welcome to my channel. If you're new here, this channel is where we take personal finance seriously, but make it simple. As a CFA with over 15 years of experience in the financial industry, I help people in their 30s and their 40s grow their wealth with practical advice and simple tools. And if you don't subscribe right now, you'll probably never see me again. But if you do, you're choosing to build a smarter, more intentional financial future. Alright, let's break it down. Herd mentality is when you follow a crowd, buying or selling because others are doing it too, and not because you've done your own research. And it's driven by emotion, mostly fear of missing out. When markets are up, you chase trends. When they crash, you panic sell with everyone else. And while this feels safe in the moment, it often leads to buying high and selling low. So how do you know if this is happening to you? Let's look at a few signs. You feel anxious when you're not investing in what everyone is talking about. You make decisions based on trends, not analysis. You often regret your investment moves afterwards, and you second guess your instincts if they go against a group. Sounds familiar? Right now, with market uncertainty rising, hopefully not anymore, herd mentality is everywhere. Social media hypes, 24-hour news, and viral investing tips create pressure to act fast and follow the crowd. But markets reward patience and discipline, not urgency and emotion. If you're in your 30s or your 40s, this is the exact time to build a steady, long-term strategy, not jump from stock to stock, hoping to catch the next wave. It is important to understand that herd mentality is not the only bias at play. You might also be dealing with loss aversion, holding on to bad investments because you just hate taking a loss, or maybe overconfidence, thinking you can outsmart the market solo, or maybe confirmation bias, only reading things that agree with what you already know or believe, and finally anchoring, making decisions on old prices or outdated expectations. These all sneak in, and together they magnify bad financial outcomes. Now let's get nerdy for a second. Our brains are wired for safety and belonging, because back in the day, following the group literally kept us alive. In investing, that wiring hurts more than it helps. It pushes us toward comfort and away from independent, logical choices that build long-term wealth. Now here is the most important part of this video: how you can reclaim your independence. First of all, set a strategy before you invest. Secondly, create rules for when you buy, sell, or hold. Thirdly, stick to a diversified portfolio. And if you want to know more about why that is important, make sure you check this video up here somewhere when I talk exactly about that. Also, make sure you turn down the noise. Unfollow hype accounts. Stop checking every news. It's really important. And if you want to dive a bit deeper into this topic, you can also check this video up here. And finally, track your thoughts before acting. This way, you will create awareness, and awareness equals power. You're not trying to be perfect. You're building systems that protect you from emotional impulses. Because here's the harsh reality. The market will always have trends. There will always be noise. But lasting wealth isn't built by the crowd. It's built by those who think independently and invest intentionally. And if you want to know how Warren Buffett acts in volatile markets, make sure you tune in for my video next week when I will be talking exactly about that. See you then. Bye bye.